Risk. There's been a lot of questions about what it is.
Please stay with us to learn more about the significant risk to the U.S. Treasury, as billions in U.S. tax dollars are siphoned off by foreign-owned insurers into offshore tax havens every year.
Well, living your life and running your business involves some risk. And to minimize that risk, you need insurance. Business insurance, home insurance, catastrophe insurance. There are all kinds of insurance.
Clever graphics would be better if they included a map that shows where foreign-owned insurers hide their profits.
Like their customers, insurance companies have to buy insurance to manage their risk. And to keep prices competitive and the market stable, insurance companies actually share their risk with reinsurance companies. Reinsurers are companies that help keep your insurance premiums low.
We agree, but only with respect to third-party reinsurance, which plays a valuable role in the U.S. market. Our objection lies with reinsurance transactions with affiliates, which do not add additional capacity to the market. These transactions allow foreign-owned insurers to strip profits overseas into tax havens to avoid paying their fair share of U.S. taxes.
By absorbing and managing some of this risk. By spreading the risk around the world, insurance companies don't become overexposed and can provide consumers with more insurance at lower prices, all thanks to reinsurers. But a bill in Congress is threatening to change this. H.R. 3424 would attack this necessary risk-sharing function by levying a new tax on these global reinsurers.
This is not a new tax on foreign reinsurers. The legislation merely would close a loophole that allows the U.S. subsidiaries of foreign-owned insurance groups to avoid taxes that apply to all U.S. companies. Many of these foreign reinsurers are former U.S. companies that moved overseas to avail themselves of this loophole and avoid paying tax.
But what the proposal doesn't mention is that it would also cut insurance availability and raise the cost of your insurance.
Not true. Do not buy into the opponent's scare tactics. Foreign-owned insurers collectively provide less than 2% of homeowners' insurance in all coastal states. The legislation will have virtually no effect on capacity or pricing for catastrophic coverage. Taxes are already built into the price consumers pay. Foreign-owned insurers just get to pocket the extra profits.
An independent expert even calculated the annual cost to consumers, like you and me, would be $10 to $12 billion.
This is simply false. This legislation will actually benefit tax-paying consumers by recapturing an estimated $17 billion of revenue for the U.S. Treasury. At a time of burgeoning federal deficits, it is wrong to continue to allow foreign-owned insurers to avoid U.S. tax on their U.S.-based business while American consumers and businesses face tax increases.
No wonder some of the bill's supporters admit the measure could have unintended consequences. Reinsurers here in the U.S. and from around the world also provide the capital needed to insure our country against catastrophic events like terrorism and natural disasters such as tornadoes, earthquakes, floods, and wildfires.
Third-party reinsurers will continue to provide needed capital for catastrophes, and there will be no adverse impact on catastrophic claims-paying ability as a result of this legislation.
Did you know that after September 11th, international reinsurers paid 64% of the $26.8 billion in related claims to help rebuild and repair New York? And along the Gulf Coast, foreign reinsurers are essential after catastrophic events. Foreign insurers and reinsurers paid more than 60% of the $59 billion in loss payments for Hurricanes Wilma, Rita, and Katrina.
The statistics cited regarding claims paid after Wilma, Rita, and Katrina all involve third-party reinsurance transactions, which are not affected by this legislation. Thus, these statistics, while laudable, are irrelevant to the issue at hand.
For more information, go to www.keepinsurancecompetitive.com.
For a balanced view of the issues, please visit coalitionfordomesticinsurance.com.